Good morning and welcome, Patriot Radio News Hour. It is Friday, the best day of the week. Our toll-free number, 800-951-0592, as if you didn't know. And the website at allamericangold.com. But since it's Friday, we got jobs, we got all this stuff. We'll get to it. But Jason, it's Friday. The baseball playoffs are starting today. We had a Yankee. I grew up a Yankee fan. I don't watch a lot of sports anymore. But a Yankee, Aaron Judge hit 62 home runs, which is, in my book, the record, because the steroid era, you had Bonds, McGuire, Sosa, they all hit more, but they were all juiced up. I'm hoping that this guy isn't, but there's been a lot of cheating everywhere. People are cheating in poker, chess, even fishing tournaments. I just saw a thing where this young chess prodigy, he's I don't know, some type of grandmaster, whatever they call him. He's playing too good, and they were actually X-raying his backside to make sure he didn't have a device in there. Even pro fishing tournaments now, people are putting weights into the fish, and everyone's lost their mind.
Well, what is that one saying that some people say, if you're not cheating, you're not trying? It sounds like it came straight from a banker, doesn't it?
I used to, it does, right? I used to play cards, me and my buddies, we played a lot of Texas Hold'em. Back in the early 2000s, and when Chris Moneymaker won the World Series, we all caught the poker bug. I had to watch it because I saw about this woman and this guy. They were in this big event, and so I watched it after the fact because they said, hey, this lady had to be cheating. And I looked at her, her cards, his card, and I'm just like, oh my God. I don't know why she was even betting in the hand to begin with. It would make sense. I just don't know how they did it.
Yeah, I know when Lance Armstrong got in all of his trouble, the thing I've always heard is, well, all the other guys were doing it too. Why do they single him out? So sometimes you got that going on, Joe. If they're all cheating by the same rules of cheating, then I guess that's where the sport is, I guess, right?
Yeah, I guess you got to be a better cheater. I guess my point. You can't go all in on a hand that you got absolute trash. Right? She won it though. That was the other part. Like the guys in this fishing tournament. This was the one that I really didn't get because the fish they're a certain size, right? So you can't have the same size fish as everybody else, but somehow your fish weigh 10, 12, 15 pounds more. The fish would have to be bigger.
So what?
Right?
So what are you saying?
Hey, wait a minute. Your fish, it's 12 inches long. This guy's fish is 12 inches long. How does yours weigh double the amount that his does? I don't know. Let's cut into it. There's some lead balls in there.
Lead, or did it maybe tungsten, something that's really dense?
Something, whatever.
Yep. I could just see
and
it
now. They're talking about, listen, they want to have lie detector tests.
Maybe they just need
So
maybe they just need a metal detector test.
On Maury,
right? Run a metal detector over that fish.
Right, there we go. Metal detectors, lie detector test. You just hit 62 home runs. Hook them up to the lie detector. Are you on steroids? Is your bat loaded, right?
Of course, if you do the lie detector test, someone's going to cheat on that machine, too.
Right. Yeah, there's always a way, isn't there?
Yep.
But I would just love it. I would love it. Wouldn't it be great if we could do that? Get Joe Biden on the lie detector, Jay Powell, maybe Jim Cramer, right? You guys on TV that are telling everybody to buy stock. Is that, do you really mean that, or are you just flat out lying?
Well, it's interesting, Joe, because you talk about cheating, and really, if you really want to win, you pay off the referees. So in the 08 crash that we had, it was those ratings agencies that gave the AAAs without even batting an eye or looking at it, right? They bought out the referees. That's how the '08 disaster came.
Right. That's another great point. That's another way the system is backwards. Well, let's see. They're going to pay. This company's paying me to grade their debt. And, man, if I don't give them a good grade, they're just going to pay somebody else. Right? So I'll just give them the grade. They tell me it's A+, and it's A+.
I could just imagine you're handing over your stuff, trying to get that AAA rating, and then you start to just get your AAA rating for the worst mortgages. But man, that's at that moment that must have been the free for all, right, Joe? That must have been like 2004, 5, and 6. They probably were throwing everything they could at those rating agencies.
The problem was, right? Hey, they're probably saying, "Listen, everybody else is doing AAA, so you should too." But don't question it. Obviously, it's AAA. Look they've all been approved AAA, right? It's at a certain point it's just meaningless, right? It's kind of like the value of the dollar. Oh, look how strong the dollar is.
I'm sure a little extra money got passed, too. I bet a little extra money got passed over there, too.
Yeah, just a little bit. Speaking of a little bit, the Dow is down a little bit, 450 points. We've taken away about half of the first 2 days of gains. Jobs. I'm sorry, not jobless. Jobs. The jobs number came in. It was too hot. 263,000 jobs created. That was pretty much in line with what most people were expecting, but the devil's always in the details. We'll give them to you when we get back. Patriot Radio News Hour, Joe and Jason. Don't touch that dial. 800-951-0592. Gold's down 9, 1,702. Silver's down 30 cents here, 2031. But again, holding those key levels. The Dow, like I said, down about 450 points. As the payroll numbers, 263,000 jobs. Remember, this is about how bad is it going to get. It's going to be all about jobs, right? And Jason and I, we've been telling you this for a while now. If the job market hangs in there, then rates are going higher until jobs go away. I guess that's probably the easiest way to say it. But 263, still too hot. I mean, that's slower, but still too many. But again, it could have been any number. It could have been 400,000. It could have been 200,000. Tell me about payrolls. Tell me about wages. Wages, again, up another 0.3. So the same thing that it was up the last month and the month before that. So, Jason, no let up in average hourly earnings. The big surprise, I guess, if there was a surprise, 50,000 people left the workforce. The unemployment rate, which was 3.7, fell to 3.5%. So another one, hey, we're going to probably, in all likelihood now, Jason, get that 0.75 point rate hike here coming up, in about 4 weeks.
Right. Is it next week? Is that when we get the CPI?
Yeah, so we'll have one more CPI before the rate meeting. I think we get the CPI in a couple of weeks, and then the week after that, we'll get the rate hike.
I think if the CPI is high 8s or into the low 9s, I think we get a point. But if we get kind of where it was at or even lower, then I think 0.75. To me, if that number's like, let's just say that number is 7.9 or 7.7, I could see the half point then. I really think they're going to put a lot of it on that number, Joe. So I guess we'll find out.
Yeah, we're going to have to wait and see. But again, like I said, the inside the number, I think the thing that they hated the most, the wage number, and then the fall of the unemployment rate. Some people out there know now they're trying to judge how high does the unemployment rate have to get.
Yep.
For the Federal Reserve to have any hopes of getting back to 2%. And some people are saying 6 to 8% unemployment. That's a whole lot. Dude, that's a lot more than 1 million jobs. That you're talking 10, 15, 20 million people would have to lose their job.
Yeah, and that is a key factor as to possibly stopping the rate hikes, just leveling off, so to speak, Joe. They got to see a lot of that happening, like you've been saying for weeks and months. And not yet, I guess, right, Joe? I think we definitely got 2 more rate hikes, I think, this year. I think they got 1 or 2 in them beginning in 2023 also. But then we'll see.
Right. So far, yeah, the data's not cooperating for the Fed. The important data points. There's some data points that aren't as meaningful that say, hey, the Fed should pause or slow down. But all the major points, CPI, jobs, jobless claims, wages, right? All of those continue to be incredibly hot.
Exactly, Joe. And I was saying that I think they got a little more runway. I've been mentioning the reverse repo market. So I looked at a piece, a guy talking about that those 2 big days, the markets went up huge Monday and Tuesday. And I'm learning some of this stuff as I go along. So the reverse repo market, which has more than $2 trillion of cash sitting there, Joe. I didn't realize this, but at the beginning of each quarter, a bunch of money leaves that, and the way it's been staying above $2 trillion, at the beginning of each quarter it drops down significantly, and what's been happening is it pops back up. Then the cash, the rest of the month, it starts to build back up. So it dropped on Sunday, Monday, it dropped $200 billion out of there. So that cash left. Whatever banks grabbed it. I think there's like a quarterly stock buy, which is why the stocks went up Monday, Tuesday. Now look what's happened since that ended, Joe. Stock's been down all the rest of the week. So
giving it back.
Yep.
I'm watching rates right now, trying to keep our eye after what happened in the UK. German bond yields, Italian bond yields, Spanish bond yields, and UK bond yields all heading higher today. The Italian bonds. This is the second or third day in a row where we're seeing 2 and 3 basis point increases in Italian bond yields, now up to 4.7. The UK back to 4.2. Remember, at 4.5, things got really panicky. And then on the currency side, Jason, the Japanese yen back above 145, so 145.21. And right, the Bank of Japan said that 145 was kind of that line in the sand. We're right back here. Could we again go right into next week? Because obviously it's the end of the week this week, and have these same problems reappear again? Could we see Japan having to intervene again in the currency markets? China having to intervene again in their currency markets? Does the UK need to intervene in their bond markets? And it looks like now maybe Italy and Spain may be ready to join the party.
That all comes down to who's going to buy treasuries then, right? Who's going to buy them, Joe? That's where the market crash will come, is if somebody is not willing to buy any of that. That's where someone's buying it, Joe. The thing would have crashed already. Who's buying this stuff? And why do I feel like the Fed's got some secret little stash there? All right, we only have so much cash to give you, a little bit here, a little bit there. And this is why I keep going to the reverse repo market. There is cash that these banks have stashed there, and I think that buys them a little wick on the bomb before it blows up. I think that's why I've been watching that. We'll see, Joe. It's going to happen. It's just a matter of when.
Well, I just got an update. Wolf Richter does a great job in research, and the Fed's balance sheet. Remember, they were supposed to start selling off their balance sheet in April. We have a number that's updated through last week. It's only down $200 billion total. So April, May, June, July, August, September, 6 months, only down $200 billion. And Richter was noting the treasuries is one thing, but these mortgage-backed securities that the Fed owns is proving very difficult to get rid of.
Yes, Joe. That's once again you bring in this stuff. Where do they go, Joe? Where do they go? Here, that's the whole thing. These are the things that are being done, right, Joe? And what are the choices they have, right? Where should it go, Joe? How do they fix that situation, Joe?
Yeah, and again, part of the problem. So just to give you an example, they're supposed to sell $35 billion worth of mortgages this month. Okay?
Yep.
Well, I should say last month, September. They only sold 11.
Right.
So they didn't even sell a third of it. Part of the big thing is nobody's refinancing. Yep. So the Fed, because if they refinance, the Fed could get rid of that loan. Hey, we're not buying up, it's refined, we can take it off our books. And the realities are nobody wants to buy these mortgages because they think home prices are going to fall. And obviously rates are much higher now, so these are losers for the central bank. So it's kind of funny that the rate hikes are causing them having a hard time getting rid of these mortgages.
Yeah, once again, what are they going to sell it, Joe? Who's going to take it? Who's this?
That's a sucker bet. Nobody buys that.
Right.
Wait a minute. You got a mortgage at 3%. The yields are now 6.5%, and probably going to be 7% here in another few weeks. Yeah, home prices are starting to fall. Yeah, no, I'm passing on that. No, especially these homes that were bought in 2020, 2021, right? Even going back to 18 and 19, and if they didn't have a big chunk down, those mortgages aren't that attractive.
Nope, Joe. Like it's been a catch-22 for a while. So we'll watch it. We'll watch and see because they're supposed to be taking so much more off that balance sheet. That was, usually when the Fed, here's the one thing: when the Fed actually announces they're doing something, they do it. This is one of those situations right now where they're not getting done what they said they were going to get done. So we'll have to keep watching that, Joe, because if they can't sell off the balance sheet, they're not really, they're not really tightening stuff, are they? You got to get rid of that stuff.
Yeah, and again, there's problems. I guess that's the biggest thing. And again, we just look for signs in this stuff. When the Fed says, hey, we're going to sell $35 billion of mortgages every month, they only sell 11. That's a problem, right? The Treasuries was at least close this month. They're supposed to sell $60 billion. I think they sold 57, but they did it all primarily in the very last week. So I don't know if the Fed is like, hey, there's only certain weeks where there's enough liquidity for us to unload them. And again, I think what we're going to see is as soon as they stop raising rates, which, let's face it, in the next, say, 3 to 6 months, I think it ends, they're also going to announce the end of quantitative tightening all at the same time because, obviously, Jason, we already are seeing signs of liquidity problems.
Yeah, they're not really tightening anyways when it comes to selling their balance sheet. We don't even know what they actually have there. I mean, I don't have a list of it.
I mean, they still got $8.8 trillion on their balance sheet.
I've seen stuff that says that they still have $9.5 trillion. so,
again, right? We don't know. This is their official number that they have to release.
Yes.
These numbers. These were their official released numbers. To Jason's point, we find out years later. That they were doing a whole lot more. How about this? They're saying now, and you know what? I'll keep my eyes out. But they're saying that new cars are coming back. That, hey, they're starting to become more available. The problem is that nobody can actually afford to buy a new car anymore. So they're saying that new vehicle loan rates has now soared to over 7%. And that loans rates in the used vehicle markets are now up to 11%, Jason. So, and again, the worse your credit score, the higher the interest rate you pay.
Yeah, exactly. With the higher interest rates, it's more than just home loans, which is what we hit all the time. Yeah, credit card interest rates and then car loans. And no duh, there's going to be more cars available. Who's buying the ones that are coming out now, Joe? I know that there was a so-called shortage of chips and everything, but it seems to me from what I've been seeing, especially with used cars, but with new cars, who's buying, Joe? Who's going to? You just talked about a truck that's $51,000 before you do taxes and title.
Let me tell you, wow, look at this number. 13.7 million is now what they're saying car sales are going to be for the year. And that includes selling to rental car companies. That's all cars. 13.7 million. That is the lowest levels, gosh, at least in a decade, maybe more. I don't have all of the data, but we are selling 17, 18 million new cars a year. So to take 5 million off of that number, you're talking about what? 25 to 30% fewer car sales, home sales now down 40 to 50%. These are huge, huge amounts to take off of the economy.
Yeah, Joe, that's. I'll say this: I'll go back to the car. I just $60,000 for a vehicle. I mean, it seems like, and I'm sure it's too expensive. But that's all you buy a mobile home for, right?
Well,
you buy a house for that you can live in.
New record for average price now. New car now over $45,000.
Holy cow!
That's just insane. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Listen, we got $20 gold pieces, and I got a good amount of them. We took $30 off. Below 2,100, 2,095. Take advantage of that. That's a really good price right now because gold and silver premiums are just skyrocketing. Matter of fact, silver premiums today, a new all-time record high over spot, and it's just been unrelenting, Jason, especially in the silver markets. But now we're seeing the same problem in the gold markets where wholesalers are out there begging dealers to sell them product.
Yeah, the only time you're going to have that sort of thing is when the market's not making sense. You know, everyone keeps looking at that paper price, Joe, which, you know, there was some sort of, you know, relative harmony between, okay, this is what you have to sell physical for versus what that spot price is. But since 2020, that just stopped being reliable.
And again, yeah, you bring up such a great point, that paper price. What this is telling you, not only, obviously, we see the same thing in oil and gas, right? You know, unleaded gas is $2.70 on the paper markets, $2.70 a gallon, right? Nobody pays that, right? You're paying $3.50 to, well, here in Arizona, $5, right? California, where my son lives, $6.50. But the same thing's too, and really what it's saying is, hey, that 29,000 and change that Wall Street says, that's not reality. I think that's the other side of it. What's the other side of that, which just means these equity markets probably have a lot more pain coming to them, and people are in these gold markets buying now, because I'll tell you right now, here's the problem, Jason. When this next leg down, we get that gold and silver pop that everyone knows is coming. And again, I'm telling you when it's coming. The second the Fed starts to slow down from these 75 basis point rate hikes, silver and gold are going to start going. The second the Fed stops rate hikes, silver and gold are really going to go. Same thing with quantitative tightening when that ends. So all the momentum is coming into those markets. And the problem that I'm worried about, Jason, when that happens, and that's when, you know, we're probably going to see a lot more pain being inflicted into the economy because of it. There's going to be a real good chance that there's going to be a huge lack of availability when that happens.
Yeah, that's one of the things Joe and I have to deal with when the buying of gold and silver hits a high peak. Is, you know, we've kept out. There's a couple times since I've been on with Joe here on Patriot Trading that March of this year and January, February of 2021, we did some huge numbers. Some people were just buying in huge amounts. And it gets a little scary, Joe, and it's like you're calling the guys and it's there, or it's there very expensive, or, oh, I don't have it at all. That is one of those things. Like, yeah, there's gold and silver out there, Joe, but when everybody's buying it all at once, we may have a couple of days like, guys, sorry, we have nothing today. Then you got to go. You just got to pay more, right? You got to pay more.
Go into to whatever's out there, whatever's available. But 800-951-0592. These are pre-1933, and these are the Liberties, 1866 to 1907. These $20 Liberties, of course, a lot of you know, why do we like old gold the best? It's really simple. It's the most private way to own metals, period. Nothing's more private. It's the only thing on gold that the government considers to be collectible. That actually makes it more private. You can buy it, sell it, and trade it. You don't have to worry about 1099s and driver's license. You don't have to worry about any of that with pre-33 gold. And then the other part that I like about it, in my office, I actually have the Gold Confiscation Act framed in my office here in Phoenix, and not from 1933. There was only one type of gold you could keep.
Pre-33
that was
gold.
Collectible gold coins. So these were old gold coins were the only things you were allowed to keep. And then, of course, it was illegal to own gold in this country for almost 40 years. People forget that part of it as well. And then when the United States started minting gold again in 1986, they reclassified all the pre-33 gold that didn't get melted down, because most of it got melted down. That's what is allegedly in Fort Knox. All of the gold that remained was now considered collectible. And obviously, when we're talking about what's going on here, digital currencies, the end of fiat money, a lot of people are talking about this Bretton Woods 3, which really is a fancy term. Just really what they're saying is, hey, this digital currency, they're going to need to back it with a commodity. That commodity, obviously, gold is the standard there. So, Jason, very possible that we could see gold confiscation again, even though it's not money. You know, technically, it's not money anymore.
Yeah, that's right, Joe, and it's interesting because you laid it out there, the history of it, and coin collecting, which we don't sell collectible coins. Coin collecting is called the hobby of kings, and if you have very important people across the world, dictators, leaders, heads of states, presidents, kings, collecting coins, they're not going to pay taxes on it, and they have a lot. You know, the only thing that's fun about a hobby is that you share it with your buddies. So there's why you got so many protections, Joe. It's the hobby of kings. You know, what do you collect if you're super rich? Well, let's collect money. And what we sell, Joe, is, hey, as close to spot price as possible, pre-33 gold. It may not be mint state 65 collectible gold, which would be way too expensive for the average buyer here. We get them the regular circulated, nice-looking stuff that is as close to spot as possible. And when we buy it back, Joe, we buy it back from our guys in a very respectable way. It's you got to have a good gold and silver dealer. That's what you need to have, and that's us.
Absolutely. 800-951-0592, the $20 Liberties at $2,095. And just to go back to the car thing here, listen to this craziness now. The average monthly payment is now over $700. 15% of all new car loans now, Jason, the payment's over $1,000.
Who could afford that on a even if you have those 2 or 3 part-time jobs or even a full-time job? I don't.
Well, this is what they're saying. They're saying that new cars are becoming totally unaffordable for about half of the population now, Jason. They can't even. It's a new car or it's a used car or nothing.
Yeah, well, and look what happened in 2021. Used cars became the hottest commodity out there. It went up higher than every other market out there, so I don't think used cars are really affordable either, Joe.
800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. We're just busy in here. Arlene's off today, so you're going to be on hold a little longer than normal. If you have trouble getting through, just try back again. 800-951-0592. We just had a few lines open up. So $20 gold pieces, $2,095. That's a really good deal here. Gold's down 8 right now, 17.03. Silver's down 35 cents. The Dow continues really been down almost 500 points now. So I was just going to say it's been down about 450 points. Now down almost 485 points. The Nasdaq's down 350. The S&P's down 80. Jason, it's given back about half of the gains from the first 2 days of this week to start off October. We got a jobs number that was too hot, 263,000. The unemployment rate unexpectedly fell. Wages continued to rise. Looks like more rate hikes coming. But then on the other side, GE, and a letter sent out to employees on Wednesday, is laying off 20% of its onshore wind workforce. Wind and solar, it's the Green New Deal here. I'm shocked that there's layoffs happening, but I just think this proves it really doesn't work. GE said that they're taking steps to streamline their size on their onshore wind business for what the market realities are, Jason.
I think what it shows even more, Joe, is that it's not profitable. So this is a business decision to cut back on some of their expenses, because I don't know exactly where they're at in their wind situation, but why do I get the feeling that we need to cut some people back and just slow down the wind industry of our business, because it really isn't profitable to begin with.
I guess, the 70% of their wind business is what they call onshore. Obviously, layoffs there, kind of a sign of the times, right? If you're making money, you're not laying people off. But how about this one? So, we know about the water problem here in the West. And this is going to cause problems, and again, more inflationary pressures. I hate to say it, because so far it keeps getting worse instead of better. But yesterday, and this actually what came out yesterday, it's been updated. So this story got updated this morning, and they said that 117 barges in Louisiana are in a log jam in the lower part of the Mississippi River, which has been closed to low water levels. And it's so funny because people write these articles about, hey, we should build a pipeline from the Mississippi River over to the Colorado River, but it sounds like the Mississippi is low on water too.
The Mississippi that's the main waterways of this entire continent, and whether the Mississippi's low or high, it doesn't really matter. If you're going to start potting out of that river to save the West, Joe, that just sounds like a very inefficient, bad thing to do all around. So,
and they're saying, and again, right here it is. They said lack of rainfall. The Mississippi's at near historic lows. Forced the largest U.S. Barge operator to declare a force majeure, which means, hey, I know we are contractually obligated to deliver these products, but due to things beyond our control, like, hey, the water's too low, the barge can't get through, this stuff's not being delivered, Jason.
Yeah, that's a huge problem. The Mississippi is huge for the economy and getting things moving. I mean, back in the 1800s, Joe, that was how things moved through this country. The War of 1812, that ended with the Battle of New Orleans, which was England thought that they would sign a treaty where they would own the mouth of the Mississippi, which would then choke off America financially, and that didn't happen. That's how important that river is. It's for everything that goes on in this country. It's business wise, is that important. It's just that important. Everything flows through the Mississippi.
Yeah, and then you're just left with bad choices, right? So now barges aren't flowing through. You only have a couple of options. Take stuff off, right? Make the barges lighter, which just costs more money, right? Or can we do it by rail? And they've already said, hey, it's just not feasible. There's no extra rail. No amount of extra rail can make up for what's on these barges. So again, all of these little things adding up to a lot more inconvenience and higher prices, Jason.
I don't know if you've ever seen or read the books, the Atlas Shrugged, but a lot of this stuff you're talking about the last bunch of months sure is going right down the story of Ayn Rand's Atlas Shrugged, where industry is just grinding to a halt slowly over time, and it's always government that's going to come in and try to fix everything and enriching themselves in the whole situation. I mean, it gets to the point where during the Atlas Shrugged, where they're just going to starve off a part of the country because that's just the decision that has to be made, Joe. It's crazy. It's crazy.
Well, and again, I don't know what's going on in oil here. I haven't seen. I'm looking. I've been watching it all show long. I haven't seen any news, but oil is up almost $4 more a barrel right now. 92 and a quarter for NYMEX. Brent crude now $98. Of course, we know about the cuts from OPEC. Unleaded gas, which has been on a tear all week this week. Jason's up another couple of percent this morning, now 275 on unleaded gas. So I don't know what's happened here, but crude oil up, like I said, almost $3.85 a barrel, almost $4 a barrel again today. OPEC's going to get its wish, obviously. They want oil prices $90 to $100 a barrel. They got it. Patriot Radio News Hour. We'll be back with the final segment. 800-951-0592. The Dow's down over 520 points now. Crude oil now over $4 a barrel here, 92.50 a barrel now. And Jason, you know, the one thing, we've got 2 more weeks left of the strategic oil reserve release. And barring an announcement from the Biden administration to continue, like I said, remember, we only got 11 months of supply left. At the current rate of release, we would run out of crude in the reserve in September of next year. So we've got to stop here at some point. And I'm just wondering if oil goes back above $100 a barrel, if the Biden administration is going to blink here and keep releasing oil out of the reserve. But here's the problem, Jason. They're not investing any money into drilling. And I just saw an article pop up that in order to get U.S. oil drillers to drill more wells, oil prices are going to need to be above $100 a barrel.
He's releasing out of the reserves before this midterm election to keep the gas prices down. Why do I get the feeling he's going to super-duper load up the reserves after the election because they want to choke us off with not enough oil and high gas prices?
Boy, you bring up something interesting. It's one thing to stop, but the way it works is they need to put it back. That's the thing. So it's one thing to stop. That's more than 1 million barrels of oil coming off the market. But then they also need to, at some point, start buying oil to put it back in. To Jason's point, you could really affect supply in a big way by doing that.
Yeah, and it'll be sometime in December when they just start stocking it up. And if Biden even says anything, he'll say, well, we really need to fill this back up. This is how America stays safe with oil supply. So you, the American public, are just going to have to pay $6 a gallon, $7, $8, whatever it is. You got to pay it so that we are safe. That's how it always comes in, Joe. It'll be after the election.
Yeah. You know, I'm watching all of these markets, and everybody's worried as the Fed raises rates, and everybody's raising rates, that things are starting to break. And I'm at this point now where I don't think things can coexist. They either need to fight inflation or break the financial system, right? Or not fight inflation so they can save the financial system. I think, Jason, it's really getting down to those. Those are the only two choices.
Yeah, and I think part of getting the inflation down, whenever they decide that they want that to happen, to get rid of the inflation, demand destruction. Everything you've been reporting, Joe, is demand destruction. Who can make $1,000 car payment? That means no one's going to buy cars. Who's going to buy? I've noticed, Joe, just in the last 6 months or so, the eating out versus cooking at home gap. It's always cheaper to eat at home, but the gap between eating out versus eating at home has gone berserk. I mean, eating out is it going to be a complete luxury by next year?
I'm just going to say this. We got another 3/4 of a hike coming. That's going to drive up payments even more. And the problem is not only it's bad enough when you've got to finance, $40,000 plus. But then you throw higher rates on top of it. You got rising car prices plus higher rates. Why do I have the feeling that there's a good chance heading into next year the majority of car payments could be $1,000 plus a month? U.S. $20 gold, $2,095 at 800-951-0592.